Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of September 30th, 2013. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Well, last week was a great week for mortgage interest rates. They moved lower again. What's driving them lower is basically this talks of a looming government shutdown and the Federal Reserve deciding not to taper the bond buying program. All that together is really giving a boost to the bond market, helping to move interest rates lower. If you look at the chart on your screen, you can see that big blue line. That's been a huge line of resistance. Every time we've hit that line, bonds have turned lower and rates have moved higher. We were finally able to bust through this level of resistance last week, and then we rallied higher. So you can see the long-term trend now for the bonds is for them to move higher, which means for interest rates to move lower. We've jumped off that big 6-month long-term trend of bonds moving lower and rates moving higher. So that's good news. So we are going to recommend floating your Delaware mortgage rate to start the week to see if the bond can continue to rally. But be on guard. We got some great gains here. If anything changes in the news, we could see the bond sell off, profit taking, and short-term rates could move higher. So be on guard. But you can float to start the week to see where you end up. But be ready to lock in that great rate that we've had. We haven't had this since June. Now, if we look at what's going on in the economic news, reading on the GDP, gross domestic product for the second quarter, the final reading came in at 2.5% below the expectation of 2.7%. That is showing that the economy is not growing real well. And that's part of why the bond market is doing well, because that was a bad economic report. And the reading for the second half of the year is looking worse. The predictions are it's not going to be any better. And if a government shutdown happens, the GDP will suffer even more. Then we saw some news on inflation. Two reads on inflation: personal consumption expenditures, the PCE, and the Consumer Price Index, CPI. The PCE came in at 1.2%, well below the Federal Reserve target of 2%. And the PCI came in at dropped to 1.5% from 2% in July. And again, that's remaining below the 2% target. Why is inflation important? Because if inflation kicks in, then the Federal Reserve may have to raise interest rates and may have to stop the bond buying program. So as long as inflation remains low, the Federal Reserve can keep this accommodating policy going, which has been supporting the bond market, supporting low rates. We saw some readings on the economy from consumer confidence. It dropped to 79.7, which is the lowest reading since May. And then consumer sentiment dropped to 77.5. for September, down from 82.1 in August. So consumers are not feeling as good about the economy, so that's more negative news. That helps the bond market. They're worried about the government shutdown. They're worried about the GDP. They're worried about the economy just kind of trickling along and job market's not coming back. If we look at the weekly initial jobless claims, it came out on Thursday. The claims came in at 305,000 claims, which was down 5,000 from the previous week. They've worked out the glitches with the two states that weren't reporting properly, so these are real numbers. That's good, because if you look at the long-term trend from the chart on the screen, jobless claims have been trending lower, so that is a good sign. So we may see a better than expected jobs report for October. So we're going to be on the watch for that, and we may be recommending locking as we get close to that jobs report, because the bond market may start locking in profits and it'll start selling off and rates will move higher. So be careful of that. That's coming up next week. In the housing news, the Case-Shiller 20-City Price Home Index rose 12.4% from July 2012 to July 2013. And it showed a 1.8% increase from June to July. So that's good news. We got appreciation, housing market strong. Now, pending home sales for August 2013, which measures signed contracts to purchase existing homes during that month, were down 1.6%. But we are expecting that because of the increase in the rates. But new home sales were actually up 8% in August 2013, up to 421,000 units. So remember, new home sales measures the number of new construction bought in that month. So that's good news on home builders. And then the last thing is that there was an FHA update. HUD had come out with a rule that was supposed to go in effect October 1st, prohibiting real estate agents and their brokers and anybody affiliated with that brokerage from representing both the buyer and the seller on a short sale in which the loan that's being sold short is an FHA loan. This is huge because let's say Agent X lists the property, they work for Keller Williams. That means no Keller Williams agent whatsoever could show a buyer that home, because that is a dual agency according to the rule. Well, the National Association of Realtors, NAR, was able to push through a delay on this rule, so it's not happening October 1st. No planned rollout for that, and hopefully they'll get that rule changed. That just doesn't make sense to not allow someone from the entire company to represent a buyer on that listing. So we'll keep you updated with that, but that was definitely good news there. Now in the local news, the next free first-time homebuyer seminar in Newark, Delaware is Saturday, October 12th from 10 a.m. to noon at the Christiana Hilton Hotel in Newark. And then the next one in Dover is Saturday, October 19th from 10 a.m. to noon. That's in Dover, Delaware at the Holiday Inn on Route 13. Now you can register for either one of those events by giving us a call in the office at 302-703-0727 or apply or register online at www.delawarehomebuyersseminars.com. Look forward to seeing you guys next week.